Now, let's talk about a question that's been on many people's minds. Do you think there's a chance this could extend into April? To answer that question, I honestly don't think so, but there is a possibility. The reason? Exchanges can take time. That's just the nature of it. It's not as simple as flipping a switch. But I do have some interesting information to share. I've spoken with 3 different groups who've expressed to me their expectations of being processed over the weekend. If this happens, it's very likely we'll see progress in the process over that weekend. Additionally, I've already been in contact with wealth managers and redemption teams who have confirmed they are scheduled to work through the weekend. So, while the process may take some time, these developments could signal movement sooner rather than later. It's important to stay updated and keep an eye on these shifts. Have you ever wondered how the value of a currency can change so dramatically? It's fascinating when you think about how currencies can change in value almost overnight. What if I told you that a currency's exchange rate could eventually depend on something that's not just about numbers, but about how widely it's accepted around the world? Today, we're going to dive into the fascinating journey of a currency, from its early stages to becoming a globally recognized player. This process isn't just about raw numbers or fluctuating exchange rates. It's about understanding the complex mechanics behind international trade, the financial ecosystem, and how currencies earn their place on the global stage. Let's start with the concept of establishing a currency exchange rate. In the initial stages of a currency's introduction, the goal is typically to set an exchange rate that at least aims for parity with the US dollar. Now, this doesn't mean the currency will directly match the value of the dollar. What we're talking about here is a process of pairing the currency with the dollar and, in some cases, adding a basket of other international currencies into the mix. Why is this important? Well, each currency in this basket has its own value, and they all influence each other. It's a delicate balancing act, and the value of one can affect the others, which in turn impacts international trade and investment. This step is crucial because a stable exchange rate is the foundation for any currency looking to gain widespread international acceptance. Next up, let's talk about something that becomes vital once the currency begins to stabilize: the real effective exchange rate. This will play a significant role in the process as the currency grows. At this stage, once a currency has established a degree of stability and international recognition, it can move to the point where it floats. But what does it mean for a currency to float? In simple terms, floating means the currency's value will no longer be fixed and will instead be determined by how much it's traded in the market. The more it's used, bought, and sold globally, the higher its value will rise in international markets. Think of it as a natural process. The more people and businesses that exchange the currency, the more its value is reinforced by supply and demand. As more and more people, banks, and institutions start using it, the currency begins to develop a kind of trust and reliability. This trust is key as it boosts its appeal and potential for long-term stability. Now let's break it down further with a practical example. Imagine a small business in a foreign country decides to start accepting this currency in exchange for goods and services. At first, it might seem like a small step, but once other businesses follow suit, the demand for that currency begins to increase. The more businesses that adopt it, the more that currency gains traction. This is where the magic happens. The currency starts climbing in value, not just locally but in international markets, reflecting its growing global acceptance. The more it's accepted, the more it's used in trade and transactions, which helps to reinforce its worth on the world stage. Now let's shift focus and bring in the Central Bank of Iraq, CBI, which plays a significant role in this process. The CBI is like the guardian of the currency's value. Their job is to monitor the currency's growth carefully. Once a currency reaches a solid level in the market, the central bank will step in to manage its progress. They are responsible for ensuring that the currency doesn't become too volatile, and they keep a close eye on how much it's being used in the market and at what value. But what does it mean for the central bank to cap an exchange rate? Essentially, capping the exchange rate means setting a limit on how much the currency can fluctuate, either up or down, relative to its trading peers. It's like setting a safety net for the market, preventing extreme price swings that could destabilize the economy or cause inflation. In order to set this cap, the CBI will rely on data from various tests and analyses. This is part of what we call the RV phase of monetary reform. RV stands for reevaluation. During this phase, many different factors are taken into consideration: economic stability, market demand, international trade patterns, and more. For example, if the currency strengthens too quickly, it could hurt exports, as local goods would become more expensive for foreign buyers. On the other hand, if the currency is too weak, it could cause inflation and erode the purchasing power of its citizens. The role of the CBI is delicate because they must find the right balance between making the currency strong enough for international trade, but not too strong that it hinders the economy's growth. Once the right balance is found, the currency can thrive both domestically and internationally. This brings tangible benefits to citizens and positions the currency as a reliable international asset. So what does this mean for everyday people like you and me? Well, as the currency grows stronger, we might see tangible benefits. Investment opportunities could increase, and purchasing power could improve, which means the value of money in your pocket goes further. As the currency becomes more accepted globally, it creates more business opportunities, leading to further growth. Let's now address an important issue, the 3-0 notes. These are the 1,000, 5,000, and 10,000 dinar notes, which have historically been the backbone of cash transactions in Iraq. But recently, things have started to change dramatically. Over 70% of these notes have been collected, creating a significant cash shortage. How did this happen? Iraq's economy has faced various challenges in recent years, and these notes have been gradually pulled from circulation. With fewer of these larger denomination notes available, businesses are struggling. Small businesses and micro-enterprises, which heavily rely on cash transactions, are feeling the brunt of this shortage. Without these high-denomination notes, it's hard for businesses to operate efficiently, buy supplies, or even pay workers. At the same time, authorities claim there's no liquidity problem because they supposedly have enough lower-denomination notes. But are these notes enough to replace the purchasing power of the larger 30 notes? Many people say the lower denominations just can't keep up. The problem is compounded by the collection of U.S. dollars, as many Iraqis have been holding on to U.S. dollars rather than their own currency. This has left citizens with fewer options for everyday transactions. What does this all lead to? A vicious cycle. As cash becomes scarcer, people start hoarding what little cash they have left. This makes the shortage even worse. My friends in Iraq have shared how the once bustling streets, filled with small stalls selling everything from food to clothing, have now quieted down. Many small businesses have shut down because there's no cash flow to keep them going. And this cash shortage can have even bigger consequences. Inflation might rise, making it harder for people to afford the basics. As the trust in the currency shrinks, it becomes even more challenging for the economy to recover. So what can be done about it? First and foremost, we need to raise awareness. People need to understand what's going on, so we can advocate for change. Second, we should encourage policies that bring cash flow back into the economy. Finally, we should all support local businesses, whether it's by making purchases or donating to help keep them alive. Every bit counts. We can't just sit back and hope things will get better. Rebuilding trust takes time, but it can happen if we all work together. Sharing stories about the cash shortage and raising awareness can push for the necessary actions that will help improve the situation. So I urge you all to stay aware and stay informed. It's easy to overlook issues happening in other parts of the world, but each story matters. As we wrap up today's video, I'd love to hear your thoughts. What do you think about the journey of a currency from its early days to becoming a global force? Do you see potential in your own country's currency? Drop your thoughts in the comments below. If you found this video insightful, please don't forget to like and share it with others. It helps the message reach more people who may not be aware of what's going on. Thanks for watching, and I'll catch you in the next video.